Renting in New York City, investing in undervalued properties, and earning big with Airbnb. Meet Julia Limberski, the 30-year-old tech worker who has cracked the code to real estate success. In an exclusive interview with Business Insider, Julia Limberski, a tech executive and real estate enthusiast, shares her unique approach to investing in the property market. With an impressive monthly revenue of up to $20,000 from her 5 Airbnb units across different locations, Limberski has found a winning formula. But before we get into it, don't forget to like and share this video with your friends. Be sure to subscribe to our channel to get notified of the next video from us. Shall we start? A passion for home design ignites the spark. Growing up, Limberski was fascinated with home design, preferring renovation shows over soap operas. Today, as the head of growth at a startup, she maintains her passion by spending hours on Zillow instead of scrolling through TikTok. Visionary investing strategy unleashed. Limberski's investing strategy revolves around finding an undervalued property in up-and-coming areas. By researching approved development projects, she identifies communities with potential for growth. Investing in multiple cheaper properties allows her to add value over time rather than going all in on 1 or 2 expensive properties. New York City, pricey, competitive, and off the table. Initially, Limberski considered buying property in New York City, where she resides. However, the exorbitant purchase prices, especially in Manhattan, and the hyper-competitive market made her rethink her plans. She realized that the returns on investment might not be worth the high costs. Renting in New York City, buying elsewhere, and the Airbnb bonanza. Opting to continue renting in the city, Limberski decided to invest in properties elsewhere. In 2020, during the early days of the pandemic, she bought a home in upstate New York, a region she had fallen in love with. After experiencing renovation challenges, she chose to rent it out on Airbnb, kickstarting her journey as a short-term rental host. Expanding the empire, Florida and Albany. Motivated by personal connections and promising opportunities, Limberski acquired 2 more investment properties, a beach house in Florida, inspired by watching The Sopranos, and a multifamily property in Albany, discovered during a memorable anniversary road trip. With these additions, she now operates 5 Airbnb units, generating significant monthly revenue. Financial freedom and future ventures. Limberski's Airbnb business has granted her financial independence. Even in a worst-case scenario, where both she and her husband lose their jobs, they have the security of their properties covering all expenses. Looking ahead, Limberski remains keen on expanding her real estate portfolio, eyeing undervalued property like Bridgeport, Connecticut, Schenectady, New York, and even abroad in Madeira, Portugal. Lessons from a real estate maverick. Limberski advises rookie real estate investors to invest in places where they can envision themselves living. If they can see the potential, chances are others will too. She acknowledges the challenges of the real estate world, but emphasizes the rewards of perseverance and attention to detail. The art of spotting an undervalued property. When spotting an undervalued property, it's all about having a keen eye and staying informed. While the real estate market can be dynamic, there are a few key indicators to look out for. Firstly, monitor areas experiencing significant infrastructure development or revitalization projects. These investments often indicate future growth potential, making properties in these areas potentially undervalued gems. Next, consider the local market conditions and trends. Look for areas where property prices have stagnated or seen slower growth than neighboring regions. This could be due to limited amenities, transportation options, or an oversupply of similar properties. Furthermore, pay attention to properties with cosmetic or minor structural issues. While these may deter other buyers, they allow you to add value through renovations or improvements. Lastly, leverage technology and data to your advantage. Utilize real estate websites, market reports, and data analytics tools to identify undervalued areas and properties with potential for growth. By combining your insights, market knowledge, and intuition, you can develop a knack for spotting an undervalued property and unlocking its true investment potential. Maximizing Airbnb revenue. Tips and tricks. When it comes to maximizing your Airbnb revenue, there are a few tips and tricks that can make a significant difference in your earnings. Firstly, optimize your listing by highlighting your property's unique features and amenities. Emphasize any special characteristics that set it apart from others in the area. This will attract more potential guests and help you stand out in a competitive market. Next, set your pricing strategically. Consider the demand and supply dynamics in your area and the pricing trends of similar listings. Undervalued property can offer a competitive advantage by setting slightly lower prices to attract more bookings. Another key aspect is providing exceptional guest experiences. Pay attention to cleanliness, comfort, and thoughtful touches that enhance their stay. Positive reviews and ratings are crucial for attracting more bookings and building a solid reputation. Additionally, consider offering extra services or amenities to increase your listing's appeal. This could include providing local recommendations, offering discounts for longer stays, or even partnering with local businesses to provide exclusive perks to your guests. Lastly, stay up to date with the latest Airbnb trends and technology. Explore the platform's new features and tools, such as dynamic pricing algorithms or instant booking options, to streamline your hosting process and maximize your revenue potential. Navigating New York City's competitive rental market. Navigating New York City's competitive rental market can be daunting, but with the right approach, you can succeed. Firstly, be prepared for high rental prices. New York City is notorious for its expensive housing market, so budget accordingly. However, don't let that discourage you from seeking undervalued property that may still exist in certain neighborhoods. Expand your search beyond the popular areas to increase your chances of finding an undervalued property. Explore up-and-coming neighborhoods that offer the potential for growth and development. These areas may have lower rental prices than established neighborhoods, making them attractive for those seeking undervalued property. It's also important to act quickly. Due to high demand, properties in New York City often get rented out within days or even hours. Stay proactive by setting up alerts, working with real estate agents specializing in rentals, and being prepared to submit applications promptly. Consider alternative rental options, such as subletting or shared housing arrangements, which can offer affordable options in desired locations. Lastly, review and understand the rental market regulations and tenant rights in New York City. Familiarize yourself with rent stabilization laws and the lease terms to protect your rights as a tenant. By being proactive, open-minded, and knowledgeable about the market, you can navigate New York City's competitive rental market and potentially find undervalued property that meet your needs and budget. Balancing rental income and property expenses. Balancing rental income and property expenses is crucial for successful real estate investing, especially when dealing with undervalued property. To start, it's essential to estimate your potential rental income accurately. Research the local market to determine the average rental rates for similar properties in the area. Remember that undervalued property may require initial renovations or improvements to attract tenants and maximize rental income. When considering property expenses, don't overlook the costs of property management, maintenance, insurance, property taxes, and utilities. These expenses can significantly impact your bottom line. Carefully analyze the property's condition and potential ongoing maintenance needs to forecast future expenses accurately. Aim for a rental income that exceeds your property expenses while remaining competitive in the local market to strike a balance. Undervalued property can offer an advantage in this regard, as they often come with lower purchase prices and potentially lower property taxes. Regularly review and adjust your rental rates to keep up with market trends and maximize rental income. By balancing rental income and expenses, you can ensure the property remains profitable and continues to build equity over time. Remember, the undervalued property can be a great investment opportunity, but thorough financial analysis and careful management are key to successfully balancing rental income and property expenses. The journey continues. Julia Limberski's inspiring story of building a successful real estate empire continues to unfold. She will make further waves in the industry with her knack for spotting opportunities and determination to succeed. Stay tuned for the next chapter in her entrepreneurial journey. What will you truly remember among these information we have for you? Comment down below and share it with us. Again, don't forget to like, subscribe, and share this video. See you next time.